Ladies and gentlemen, good day and welcome to Arihant Superstructures Limited Q3FY22 earnings conference call hosted by Dolat Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Kapil Yadav from Dolat Capital. Thank you, and over to you, Mr. Yadav.
Thank you, Nirav. Good afternoon, everyone. On behalf of Dolat Capital, I would like to thank Arihant Superstructures Limited for giving us the opportunity to host this earnings call. From the management, we have with us today Mr. Ashok Chatterjee, Chairman and Managing Director, Mr. Parth Chhajar, Promoter, Mr. Abhishek Shukla, Chief Strategy Officer, Mr. Deepak Lohia, Chief Financial Officer, Arihant Superstructures Limited. Now I would like to hand over the conference over to Mr. Abhishek Shukla ji.
Thank you, Mr. Kapil. Good afternoon, ladies and gentlemen, and thank you for joining the Arihant Superstructures conference call to discuss Q3 FY2022 results. First, I will go through key operational highlights for Q3 and 9-month FY22, followed by the financial highlights of the quarter, before handing over to Mr. Parth Chhajar and then subsequently our Chairman and Managing Director, Mr. Ashok Chatterjee. During the quarter, the construction work commenced and gained pace for our affordable housing projects, Amisha Phase 2 at Taloja and Arihant Superstructures again at Taloja. If you recall from our last conference call, these were launched in Q2. We have already sold around 55% of 134 units launched in Amisha, which was launched in Q2, and over 60% of 250 units launched in Arihant Superstructures, which was launched in Q1 FY22. Coming to overall sales booking achieved in Q3 FY22, we have sold about 415 units, which aggregates to 3.66 lakh square feet of area, and in terms of value, it is 185 crores. This takes the 9-month FY2022 sales booking to a total of 1,116 units, translating into an area of about 1 million square feet with a total value of 520 crores. With this, we have already surpassed the FY21 sales booking of 400 crores. The total collection for the quarter stood at 100.8 crores, and for the 9-month, the collections were rupees 305 crores as compared to rupees 180 crores for the 9-month FY21 period, which is a growth of about 70%. The collections also surpassed the full year FY21 figures of 287 crores for FY21. So strong sales and collections is the testament of the trust of our customers in brand Arihant and the leadership position of the company in its micro markets. We are seeing continued momentum in our projects and are set to take advantage of the same in the new launches over the next couple of quarters. Taking you through the financial highlights, the total revenue for the quarter stood at rupees 88.67 crores as against rupees 73.57 crores in Q3 FY21. That is a year-on-year growth of about 20.5% as compared to 88 crores in Q2 FY22. EBITDA in Q3 stands at rupees 18.5 crores as compared to rupees 14.8 crores in Q3 FY21, which is a growth of about 24.6% year-on-year. And for Q2, it was rupees 20.2 crores. EBITDA margins increased by 68 basis points to 20.8 crores in Q3 FY22, and the PAT figures currently stand at rupees 11.6 crores in Q3 FY22 as compared to 5.15 crores in Q3 FY21, which is a growth of about 125% year-on-year. PAT margins expanded significantly to 13.1% in Q3 FY22 as compared to 7% in Q3 FY21. This is due to 13% reduction in finance cost and tax benefits arising out of our ATIP project. For 9 months ended 31 December 2021, the total revenue increased by 76% year-on-year to 261.7 crores. EBITDA also rose strongly by 84% to 54 crores, and PAT increased by the highest by 1,290% to 31.5 crores from just 2.9 crores in the corresponding 9-month period. And it has also doubled from 15.7 crores for the entire financial year FY21. This can again be attributed to 27% reduction in finance cost on a year-on-year basis for the 9-month period. The gross debt is reduced by 9 crores in the quarter and is down by 96 crores since 31st March 2020, which currently stands at 270 crores as on 31st December 2021. Strong cash flows from sales, margin expansion, and reduced finance cost will help the company to capitalize on the growth opportunities provided by the upswing in real estate cycle. Coming to the general market scenario, according to a recent proprietary research, 2021 demonstrated a strong demand across all top 7 cities. MMR in particular saw 24% year-on-year increase in demand to 112 million square feet. So last 4 years have seen modest launches, which has also resulted in declining inventory. Calendar year 21 saw a 12% decline in MMR inventory levels to 26 months now, which is very, very healthy. Strong demand coupled with modest launches has resulted in increase in price levels of about 7 to 8% on an average across MMR. It is now widely acknowledged that it is not just the pent-up demand that is driving housing sales, but also organic demand that is generated due to low interest rates, very high interest from the first-time home buyers, and favorable regulatory environment. This financial year has witnessed the beginning of the upcycle for the housing market for the next 6 years, as quoted by Mr. Deepak Parekh, and even the government's inclination to the sector is also very positive. Coupled with a very good availability of capital in the market right now for right kind of projects with reputed developers having a good track record. Almost $8 billion have been invested in Indian real estate in last 1.5 years, and many institutional investors have either raised or are in process of raising fresh capital. HDFC, for instance, has raised $2 billion recently to fund affordable housing projects, which is again a very positive sign for the sector. Overall, the market and the company is poised to do well going forward. For the next round, I'll request Mr. Parth Chhajar to take over from here and brief everyone about the organization as well as the new launches that are in the pipeline. Thank you.
Thank you, Abhishek. Good afternoon, everyone. So there is no change in the 9-month FY22 pre-sales guidance as we have achieved the targets and the cash flows. We are currently the market leaders in our area of operations with 10% market share in Navi Mumbai. Our company's focus is to gain and grow from our position year on and expand into newer geographies in the MMR region. We are bringing in new innovations in our products from this quarter, starting with the launch of the O Factor, wherein we are providing a separate office room inside the apartment. And this is coming up in our flagship project at Arihant Aspire in Panvel. Setting in with the ongoing trends, we are planning up more such launches in the upcoming 6 quarters, focusing on the affordable and mid-income housing, which will help us achieve higher volumes. As an organization, we are increasing our manpower quarterly with continuous recruitment to gear up for the upcycle. In this financial year, we have added 106 new team members to our organization across all verticals, taking the total organization strength to 308 employees. I now hand over the forum to Mr. Ashok Chhajar, Chairman and Managing Director.
Good evening, everybody. Ashok Chhajar here. Welcome to the conference call. With the business development, we have been selecting the projects with best returns and very less risk. As one of the projects which we invested in the last year at Arihant 4 on Eka, the land cost was 15 crores versus the total top line of 125 crore sales, and resulting to around 45 crore rupees of PAT margins. And such type of new projects are also there with the company's BD development in hand, which we will be engaging up in the next coming quarters very soon. Coupled up with the asset-light models, the blended margins would be often surprising and higher numbers year onwards. And as we have seen in the last 6 quarters, we have been consistent in terms of growth on period to period and cycle to cycle, as narrated by Parth and Abhishek in all the terms of business operations. And with the percentage completion method, for all the projects, it is pretty with the transparency and clarity to analyze and judge the company and its numbers and figures and balance sheets. It gives them consistency and scalability, a lot of consistency, and the scalability is in hand to be taken for the next quarters. I open the forum for Q&A for all the guests.
Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Keval Ashir from DSP Mutual Fund. Please go ahead.
Yeah, so first of all, congratulations Ashokji and team for strong performance in terms of booking and collections in this quarter and 9 months. I have two questions. So first is, since we have double-digit market shares in Navi Mumbai, so do we see this being saturated for us, or do we still have high visibility in this market?
The visibility on MMR is largest because that is the area ranging to around 50 square kilometer, which is pretty large, right from Thane starting on the one end and ending Panvel and extended suburbs like Kalyan and Badlapur all over, and being scattered in different locations with different projects from mid to small size. It enables us to de-risk ourselves in terms of sales and market share, and we are able to generate sales across all the 14 projects in different locations. Being into spread across MMR, and the next projects also coming up in the same MMR region. The demand is very high, hence for at least a decade, it doesn't look to be any saturation.
Okay, got it. And sir, second thing wanted to know is, looking at the current environment, if interest rate goes up from here, then how do you see it being impacted for real estate sector?
What these industry leaders have interacted with the Prime Minister office as well as the Government of India, it looks that there would be greater inclination towards the sector to be for the home buyers, and we look forward that there would be further more benefits coming to the home buyers, which would increase the capability and capacity of each home buyer also. And we also see that there would be a change in definition of affordable housing cap of 45 lakhs, which the associations and industries have already projected to the government. For real estate sector per se, the marginal impact of interest rate would be covered up very easily by the sector support to the government by the Government of India.
Okay, got it. Thank you so much, and all the best for the coming years.
Thank you.
Thank you. Participants, you may press star and one to ask a question. The next question is from the line of Puneet from HSBC. Please go ahead.
Yeah, thank you so much, and congratulations on good performance. If you can give some more, insight on what you're seeing on the pricing side. Is there a room for you to take some material price hikes in your markets?
The pricing on per square feet or the market price of the selling product has already increased by 10% on an average across pan-India metro city, which has well taken care of the cost and rise of materials across. And going forward, there won't be any big speculation, and each of the leading industry players have adopted the method of factory style of model where the inventory is not to be holded out, and to roll over the projects at the initial stages for sales in totality. And with that aspect, it looks like that property prices in real estate may see an average increase of 5 to 6% on year-on-year basis, but it won't be speculated to doubling up in a year or two.
But for you specifically, what extent of price increase did you take in say last quarter, for example?
We increased our pricing in the month of April itself, and it was an average of 7.5% across all the projects, depending on project to project. So some of the projects we took an increase of 12%, some of them at 5%.
So 7% in April, and post-April 2021, you haven't taken any other action?
We have not taken any much.
That's useful. Thank you so much. And on the land side, do you want to acquire new land or do JDAs? And what kind of trends are you seeing in terms of those relationships or pricing?
As a company, we generally go with an mixed model. Till today, it was all acquired land. Right now, on the business development platform, almost 5 to 6 projects are to be engaged up in the next coming short period, which would be on asset-light model, and around same 3 to 4 on outright basis. So we will have a blend of both of it because it helps out to have an increased EBITDA when compared to outright as well as asset-light model. So it would be a blend of both of them.
And in terms of land pricing, how different are they versus a year back and now?
Land prices have increased drastically in the region where the sales are very high. So we could have already seen up to 50% increase in the land price from 1 year from the past year till today. But what has helped out to the developers is the new unified DCR by the government of Maharashtra across Maharashtra, which has increased the FSI from 1 to 2.6. So the land prices is increase in land prices is equated by the increase in FSI, and hence the project reports have become more feasible and more viable.
Okay, so from 1 to 2.6, even in the areas that you operate, that's where it was.
It has come across for Maharashtra.
Yeah.
So everybody has got that.
Yeah. And is it fair to assume that similar kind? So first of all, this 50% land price increase, is it now above pre-COVID level or is it still below pre-COVID level?
It's from pre-COVID level. The
50% above pre-COVID level.
Yes.
Okay, that's interesting. And second, have these land prices change also translated into the change in the sharing ratios with your joint development partners?
Marginally, yes. Largely, the premium FSI is there, is not taken into consideration by doing the deal with the landowner. We always talk about the basic FSI with the landowner, saying that the premium FSI is an zero land which is being given by the government. So we don't give a share from the premium FSI to the landowners.
Yeah, but in terms of your relationship, for example, earlier your JDA agreements would have, for example, 40% profit share. Is the landowner now saying instead of 40%, he wants to give you only 30% profit share? Or that equation hasn't changed?
Perfectly right. The overall ratio of the landowner has decreased when compared to the whole project. So many of them are worked out to 20% and around when compared to for the total 2.6 FSI.
Sorry, can you explain this? I didn't get. So 20% is the landowner's share or your share?
So no, 20% is the landowner share. And in MMR region, affordable housing and this sector where the price of the flat is something less than 1 crore rupees, the 40% of the share was for 1 FSI, which makes it 0.4. And when compared to 2.6, the 0.4 remains same, and which means 40% of 1 is equal to 15 to 20% of 2.6.
Okay. So it in a way it has turned more beneficial for you than what it was pre-COVID, irrespective of the underlying implied land price going up.
Yes.
Okay, that's useful. Thank you. That's all from my side. Thank you so much.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Faisal Hawa from HG Hawa and Company. Please go ahead.
Yeah. Can you hear me?
Yes.
Sir, I believe that we have I believe that we have a very large land bank also in this Navi Mumbai and Panvel area. So now with land prices as well as the property prices going up, I think this land bank would be certainly very much more valuable because it will make us go into projects straight away since we now have our own land bank instead of negotiating with landowners, etc. So what would the land bank and what would be the approximate acreage or square feet that could be developed over the next, say, 5 to 6 years?
The company today has around 1.3 crores. So it's 11.3 million square feet of buildable area spread across 100 acres of land in different 14 projects. So the additional land which is yet to be converted into design stage, the alpha would be of a more advantage. Still, acquisition would be there for new projects. As we looked at the cycle of the next 6 years, as told by the most honorable person in real estate, Mr. Deepak Parekh, that we have to do the best in this terms of next real estate cycle. The company would be looking forward for doubling up the total portfolio to 20 million square feet.
So you mean to say we will be acquiring even more land?
Yes. Either in an asset-light model or in an outright basis.
But this 1.3 crore square feet of land is totally in our own name, and it is almost with clear title.
This is all clear land with approved projects and completely paid up in the books of the company.
Okay, but we have not yet started any kind of construction activity or any kind of projects on this land.
No, it is already out of the total 1.3 crore. Around 45 lakh square feet of construction is going on where concrete is poured, and the balance of 75 lakh square feet is roped in on phase-wise manner. Like one phase of Arihant Aspire is getting launched in the month of February. Similarly, as we keep on delivering and giving possession to the earlier phases, the new phases are in choose for start of construction.
And sir, how do you see this, Trans Harbour ceiling from Severi and the other infrastructure which is primarily actually favoring New Bombay's development, really panning out, and do you see that this can be an entire new development paradigm?
Yes, because across India, there is no one city where such large size of infrastructure is being taken across, right from the sea lanes to MTHL to coastal highways to airports to different ports being coming up, industrialization. So around 1 million new jobs are being generated in the region of Navi Mumbai within the periphery of around 15 kilometers from the airport radius. So that sees that this area would have a complete different cityscape and picture after a decade from here. So what today is at 4,000 rupees a square feet or 4,000, 5,000 rupees a square feet would be an history in the coming years to come.
And sir, see this entire our company evolving. We will get into commercial, residential, even high-end luxury. So will we be wanting to capture all the verticals, because as such there is no very reputable real estate developer in this entire Navi Mumbai region. So we could be able to be a very niche or a very large developer in this market. So do you see or aspire to be that kind of a player?
We take project, if you see over 1 decade and plus records, we take projects with respect to population metrics of the country. So what do we mean by population metrics is that leaving apart the economic weaker section, EWS, or leaving apart the below the poverty line, BPL people. So the population below the people is for 5 lakh, 10 lakh houses which is catered by the government. Leaving apart that, we see that 65% of the population lies into economic weaker section and LIG. Around 25% lies into MIG-A and MIG-B section, and around 5% lies out into HIG, and 1% into richer. Our company has always kept and taken projects with in all the categories of the income group, and we have done very luxury projects like Arihant Hayati, where we have used Durgio Moranti designers bath fittings also from Ibeburuti, Italy. We do also affordable housing, where standard operating processes helps out to keep the quality of construction same. And we are generally somebody by and large call us the Marutis of Navi Mumbai, where we have each and every product for every class of category of people. And that would be the same strategy going ahead also. So with respect to population, we will be always having projects, taking projects. It will not be like we will be going all into an affordable only or going into all into luxury projects. जितना population है उतना ही servicing करना better है.
Got it. So presently, what is our debt level and how, do we plan to bring it down?
Today the debt level is 290 crores, out of which 135 crores is from secured debt, which is where the major lender is HDFC, and HDFC has been there as a lender to the company since last 1.5 and plus decade, and consistently ICICI and HDFC has been lending to the company and supportive, where the 130 crore is being taken from HDFC today, and the balance of 290 is 160 crores by the promoters, which are unsecured and payable when enabled, and it's almost like a quasi equity. So debt to equity ratio with respect to servicing being done on month-on-month basis is quite low, and there is no plans to increase the debt going forward. Marginally, we will be able to reduce this complete debt in the coming 2.5 years.
Okay, very clear at least.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Ronald Sioni from Sharekhan. Please go ahead.
Yeah, good afternoon, sir. A few questions. First one is, in Navi Mumbai, most of the land is acquired majorly through land auctions, or huge land parcels are through auctions. So where I think we won't be able to participate because of the size of the land to be acquired or the amount of money required. So are there opportunities, to grab smaller land parcels, or what kind of, land goes into auction and what is available, from small type land parcels?
So I'll explain what is about Navi Mumbai and MMR region. CIDCO, the Navi Mumbai per se development plan, which was of 1981, which is called CIDCO Limited, where CIDCO Limited is the owner of the total land, and wherein small tender plots or auction plots come into market, which are not big in size. It ranges from 1,500 square meter to hardly a 2 acre or less than a 2 acre. The company is not does not have one single project in this lands from CIDCO, and the just adjoining region, which is all freehold lands, which is called Panvel Municipal Corporation and Panvel, etc., which are not under the purview of CIDCO, is where the operations of the company are, where larger pieces of land extendable from 2 5 acres to 100 acres are available, and which can be easily acquired also. There are multiple choices, and as I narrated earlier, that there are many projects which have an alpha of 3x, 4x also, blended out with up ticket size as well as affordable housing. There are ample of opportunities available across in the region of MMR region, and we are the company already is into Badlapur and Kalyan region, which are also big markets. So when we compare how affordable housing, we can tell that Vasai Virar is a one zone, Kalyan and Dombivli is one zone, and Panvel on the other side is 3 zones. The company already has presence in 2 zones big way.
Okay. And, sir, in absence of, fundraising going through, what are we looking at? Like, there will be more of JD and JV agreements instead of buying out, because you said that you want to maintain it or possibly reduce by some extent. So if fundraising plans doesn't go through, then whether you would be more inclined towards this joint development agreements?
Yeah, maximum would be turned out towards joint development agreement, and few already acquired and yet to start off. And with the internal cash flows in hand and a different strategy of selling at a double the velocity or a higher the velocity from today can enable us to generate cash across on a month-on-month basis, where these type of projects can be acquired. Though there is a great interest being showed by the leading institutions for the fundraising, which would take the company to the next levels with all such actions happening. We hope the outcome to be on the positive in the very nearest future, and this will help the company to go rapidly.
Great, sir, great. And about your any guidance with respect to sales for FY22 and 23, which you are targeting to get?
As told by Parth, we have already achieved the figures of the last quarter also, and whatever the prospects were given from the pre-sales guidelines, we have been surpassing that, and that has made a good position of the company, as well as the confidence of each and every employee in the company. And everybody is in a very energetic mood. We hope that the results will be far more better on quarter-to-quarter basis.
Yes. And what in terms of area, what kind of area you are looking at to launch during Q4 and FY23?
Overall, area means location or?
No, overall. In aggregate, how much area you would be looking at in terms of square feet?
Around 20 lakh square feet would be launched up in Q4. Around 15 lakhs would be launched in Q4, and around another 15 to 20 lakhs in Q1 of the next financial year, which are already lined up for closing up approvals from the authorities.
Okay, right. And last question from my side is that are you seeing a cost of materials rising? So is it covered actually by all the price hikes taken by the company since April, or is there anything left to be covered, or the margins may be under pressure going ahead because of that?
We covered up the inflation in the construction cost way back on Q1 of this financial year, and that is why we see that the margins on previous year to this year has increased. So we factored out very well in advance, and going further, there would be. It doesn't seem the industry is not looking, and it doesn't seem that there would be further big rises in material cost. It has already taken up the new benchmark position.
Okay, sir. Thank you, sir. Thank you very much, and best of luck.
Thank you.
Thank you. The next question is from the line of Rishikesh Oza from Robo Capital. Please go ahead.
Hi, sir. So my first question is, how much collections amount is yet to be received?
Over to Abhishek. Abhishek, can you take this question? Abhishek, you are in?
Yes, I was on mute. Sorry. Can you repeat the question?
So my question is, how much collection amount is yet to be received?
From the sold units?
Yeah, like previously or whatever that you have sold till date. So out of that, how much collection is yet to be received?
From the amount sold till date, we are yet to receive about 415 crores.
Okay. And so for the ongoing projects and the forthcoming projects that you have mentioned in the PPT, what would be the estimated sales amount and the estimated sales velocity for that?
So estimated sales amount, which is of course based on the current prices that we are seeing into our projects, the total value of the goods would be about 7,000 odd crores, and against that, the cost to complete would be about 4,200 crores. So overall, the operating cash flows will be in the range of 2,700 to 2,800 crores.
Okay, and what all
these projects are expected to be executed over next 6 to 7 year timeline.
Okay, 6 to 7 years.
Yes.
Okay, and the 7,000 that you said, this is including ongoing and forthcoming, right?
Yes, it is including ongoing and.
Okay, could you provide a breakup of that?
Breakup as in?
Breakup as in
ongoing and
yes. Yes.
So about 4,800 crores would be from forthcoming, and balance would be from ongoing.
Okay,
which is about 2,100 odd crores.
Right. Okay, and my last question, sir, if you could indicate what kind of EBITDA margins are we going to maintain then?
So EBITDA margins currently are slowly inching up. As you would see from FY21 to FY22, the margins has risen by about 1.5 to 2 odd percent from 18.5% to 20.8% now. So we expect the margins to slowly inch forward as the market prices the new environment. As I said in my opening remarks, the demand is quite high and the launches are still modest in nature. So that the general market is expected to do a price rise of anywhere between 7 to 8%. And depending upon how the market behaves, there would be a margin expansion or at EBITDA levels.
Okay, no problem. Got it. Thank you very much.
Yeah.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Balasubramanian from Arihant Capital Markets. Please go ahead.
Hello.
Yeah, good morning.
Yeah, good afternoon, sir.
Good afternoon.
Sir, I want to understand MMR residential market. The unsold inventory is more than 3,000 million square feet in this market last 4 years. Like, what kind of competitions you are seeing in these markets? Because the inventory is not much reduced in this market. The supply is continuously going on. However, the demand also meeting on the same. How do you see the competition in going forward?
The demand to the supply still is on a higher side, and when we talk about the total inventory numbers which are there on record, it speaks about the total size of the projects by different developers. But the phases of development which is undertaken are to an extent of average of 25% of the total projects in hand. So if somebody has 10 buildings, he doesn't start from 10 buildings at a time. He would start up at 2 or 3 buildings. So the numbers of the total projects in hand and projects on the shelf for sale and construction is 25% to the total numbers, which we see on data which is available for the MMR region. And seeing competition, we today also have increased our market share on year-on-year basis. So the market is being developed most, but consolidation has led to leading developers taking up better positions. So we see less competition in the coming year.
Thank you, sir. Sir, and I want to understand that in land cost, how much share accounts for in each project? Generally, it takes 30-35% kind of range, or?
No, with Arihant and its projects which are below 1 crore, which we call as 90% or 92% of the projects, which is affordable housing and MIGA and MIGB housing. The land cost goes to 15% of the total sales price. So we don't, our projects or the projects in this region by any developer, the land cost is generally 15% of the total sale price.
Yeah, thank you, sir. Sir, in central and western suburb, these regions accounted for 40% share in MMR market. How do you see further penetrations in these markets?
Come again, I didn't get you.
Sir, central and western suburb regions, like accounts for 40% of share sale in MMR region. Like how is this Arihant going to penetrate and going forward?
In terms of value-wise, yes, the Mumbai market happens to take up the biggest pie. But in terms of square feet, it is the complete MMR only. And if my guess numbers are right, the square footage-wise MMR contributes to almost 70% of the total square footages compared to 30% in the Mumbai and Mumbai suburban district.
A reminder to all the participants, you may press star and 1 to ask the question.
It's mostly done, it looks like.
As there are no further questions, I will now hand the conference over to Mr. Kapil Yadav for closing comments.
Thank you, sir. Thank you very much. Thank you all the participants for taking our time for this call.
Thank you, everybody.
Thank you, sir. Thank you very much.
Thank you very much. On behalf of Dolat Capital Markets Private Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.